Hey, so with a week that started out with a lot of underwhelming economic data, you can always count on one report to go completely against the grain. Hey, so welcome to this week's Mortgage Minutes with Mitch. I am Mitch Jenkins, Senior Loan Officer with Your Home Financial. So, starting at the end of last week, we had the revised GDP reading come in lower, and going into this week, we had a lot of weak economic data. The ISM manufacturing shows contraction, so manufacturing slowing down. We had the JOLTS report showing the lowest number of job openings in over 3 years. Unemployment claims have been steadily rising. Small numbers, but they're still going up. And the Challenger job cut report, that actually showed the lowest number of job announcements in a decade. All pointing to a slowdown in the economy, a weaker job market, and the ADP report even came out, 23,000 jobs less than expected. We're looking for 175, we only had 152,000 jobs created. The European Central Bank even lowered their rates for the first time in 5 years. Canada, handful of other countries, their banks have actually lowered interest rates as well. Then the good old Bureau of Labor Statistics came out this morning and released their job numbers. Now, it's important to know there's two components, and while I don't have time in this video to explain exactly how it works, one is the household, and that's where they basically just call people and ask them if they're employed, if are they seeking employment. That showed 408,000 jobs lost. However, the headline that you're going to see is that massive job growth, 272,000 jobs were created last month. Now, we were only expecting 185, so that was a massive, almost a 90,000 increase. Every single month they do this, and of course, prior couple months were revised down by about 15,000 quietly. But these numbers just do not seem accurate. So the household showed job losses. The birth-death model showed this increase. So it is just that it's a model. It just seems to be broken. Month after month, we get these insane job numbers that just don't line up with anything else we're seeing across the board. And as you can see here, the market responded less than favorable. So mortgage rates have taken a hit because of it. Good news is we're still about 0.25% better than we were a week ago. So overall, not a bad week, but we did definitely leave some ground thanks to the Bureau of Labor Statistics job numbers. So at the end of the day, if you're waiting to see interest rates drop, there's no telling when that's going to happen. Every time there's a little momentum, it seems like something comes in and derails it. And the only thing I can guarantee is the longer you wait, home values are going to go up. So it's going to cost you more for that home. Black Knight, CoreLogic, both showing over 5% gains year over year in real estate. So it's still a solid investment. With supply and demand, it does not look like that's going to cool anytime soon. So let me know how I can help. I'd love the opportunity to work with you, help you get into a home this year. So as always, thank you for watching. We'll see you next week.